Welcome, everybody, to the Middle Class Investor. This is April 30th and the end of April, and we finally had a down week. All in throughout this resistance area, I was calling for the market to roll down, and here in the third week, it finally has. And I think there's a good chance that the market pulls back at least into an area around this, between here and here, somewhere between 2000 and 1975. And, there's really two possibilities. There's, and you almost have to look at the bigger picture here. If this is a larger pullback in the context of this trend, so from this trend started right back here in 2011, and you can see how the market moves up, it pulls back, it moves up, and sometimes at the very end of a trend, it looked like maybe this was it right here, this pullback. So let me zoom in just to make sure we're clear on talking about the right things. It looked like this pullback was the last pullback before the trend finished, but this could be a larger degree pullback, in which case it's possible to get a new high out of this. Now, it's going to come back quite a ways, probably to this line right in here around 1950. Well, it's 1950 there, but depending on how long it takes it to come back, it could come back to this line. So let me make sure you see this line. It's this line right here. Let me take this off. So we're talking about a pullback, that might look a little something like, whoops, sorry about that. Let's try this again. Get my cursor lined up. So we're talking about a pullback that maybe looks a little something like this into this line right here. So actually a little lower than I just said a second ago, somewhere around in this 1950 to 1925 area. Now, if it stops and it bounces here, and it starts to take off the other direction like so, then we will get a new high, and probably we're looking at this area around just north of 2200, just north of this area up here where this blue box is. If we break through this area and continue to go lower and actually break these old lows, then I think you'll see that the market is probably topped and a trend change is in the making, and we're probably looking at much lower prices after that, probably down here into this yellow circle or ellipse that I have drawn on the screen. So those are our two options right now, and unfortunately, there's no way to know which one is most likely at this point. Well, what we do know that's most likely is that we know that this is going to pull back a little further. How far? Now that we don't know, but probably into this 2000 area, low 2000 area, and then probably bounce a little bit. And the key is going to be to see whether these lows down here hold, or if the market gives way to much lower prices. If these prices hold here and we get a bounce off this trend line, then we're probably looking at this area up here. So if you'll notice when I talk about what's likely to happen, I'm talking in terms of probability, what's likely or what's probable. Now that we've got a close, so let's just talk about why we're going to go lower at this point. Notice that this is the first time in this whole run-up that we've got a close below the lowest point of any previous candle. So here's this low. We didn't close. None of these lows here were closed below, but this one was. And this usually signifies the fact that buyers are starting to get a little bit weak, and their intensity with which they buy is starting to wane, and then the selling starts to take over. And you can see that it happened last time here in this case, selling, and then the buyers came right back, but then the sellers took over again. Anytime you break, here's one where we just barely broke it and closed below it, but then rallied right back up. In other words, this just resulted in chop. But you can see here we broke it here, the market came down. This is a pretty good way to tell when you start to have a directional change. Now, again, it could go like this and then just right back up. But that's not as common as, some deeper pullback that takes you to a point, say in this area and then bounce. So this is a good little way to just kind of judge what the trend is likely to do, the short-term trend. So let's look at the VIX. The VIX, it rallied a little bit this week, not much, but it did rally, and you can see here that the VIX is closed. This is the low day here, and the VIX has closed above that. So as the market pulls back, we should see the VIX at least moderately higher. And it may not get up into this area, but we should see it at least up into this dotted line area where there's a lot of congestion. If the market rolls over and goes lower, then obviously the VIX is going to continue to climb too. So let's go down here and look at the 10-year Treasury. The 10-year Treasury still a little confusing. Maybe the 30 is a little bit. Yeah, see, the 30 is a little bit less confusing because you don't. This low here is intact. So if you look at the 10-year, now make no mistake, I think the 10-year is a more important number to look at. But you can see we came down here for a low, and we could make yet another low, or this could be some sort of the other possibility. So just in terms of probabilities here, this could be the move off this previous low, and then we're going to get some sort of kind of an ABC pullback, let's say into here, or maybe right into the top of this channel, and then the market's going to take off, probably next stop right into this area, somewhere right in here around 2.4, 2.5 on the yield. So, or we could pull back to just a slightly lower low below this low. So we'll just have to wait and see what happens there. I think if you're trading bonds, which I don't recommend at these levels, but if you are trading bonds, let's go look at so the 10-year would be with the ZN/ZN for notes. If you're trading bonds, you might want to let the market pull back into this area and then look for a bounce here. That's what I'd be looking for. Now let's go back to our profit charts and look at the euro, and we'll also look at Japan. Japan, that's the Swiss franc. Euro, US dollar. The US dollar and the euro, they both for the longest time looked like they were in some sort of triangle. And of course, on the US dollar, we've been looking at the movement as if it were a triangle. But now it's beginning to look like, well, at least on the US dollar side, it's beginning to look like more of just a normal pullback. The triangle pattern is still holding up for the euro, but I suspect that will give way to some something that looks more like the inverse of the US dollar. So let's look at, we'll look at the US dollar in just a minute. Let's look at Japan. Japan's, you know, they're, what's funny about Japan, or not funny like haha, but funny like ironic, is they have had this deflationary kind of thing going on for a couple of decades now. And they've started doing quantitative easing in Japan, thinking that would help for some reason. I don't know why they would think that would help. Then they went into negative interest rates, and they just keep pushing this string as if it's gonna, you know, if they can just go low enough on the interest rates, then they'll be fine. But clearly the market doesn't think so, and Japan continues to experience some difficulty with their monetary policy, and you can definitely see it. We'll come over here in a second. We'll look at the Euro US, or we'll look at the US dollar JPY, but let's just look at the dollar right now, the Dixie, and you can see here we've been looking at potentially a triangle. That's what these yellow lines are. That you get a ever tightening situation like a spring, but that has proven not to be the case, as you can see. And whoops, and you can get rid of these yellow lines. Well, let's leave this one and just put another one in here for just a pullback. So basically we're looking for a pullback into this yellow box area. So, and you can see here that it's not going to be too long really before that happens. Maybe in fact, we're not even on a weekly chart here. Let's get on a weekly and zoom in. You can see that probably sometime next week or the week after, the US dollar will pull back into this box, and then when that does happen, if and when that happens, we say if and when, we should get a very good bounce in the dollar for another leg up, and probably you're not going to see the dollar slow down until you get into this 100 area, then a little pullback, and then a pretty big jump even higher than that. So the dollar's rally does not look complete. It looks like there's still left some time left in it, but it will be pulling back into this box, this kind of zone right here around 92 or 91 before it makes that next leg up. Now let's look at, let me pull my little cheat thing out here. Let's look at the, that's the euro. Let's look at the US dollar JPY, and you can see here that the BOJ, you know, they came out and doubled down, tripled down, and you can see that this is a pretty dramatic pullback. I mean, we've gone from 125 all the way down to 106. This is a huge move in currencies. Of course, they had this huge move up, getting a huge pullback. And, you know, if you look at the bigger picture on the US dollar JPY, I mean, you're probably looking at a pullback that's going to come into this area right in here. Let me draw it on here, and then we'll zoom in and look at it. This area right here around 95. So we've still got probably this size move again coming down. Now we probably could get a very good bounce here somewhere in here. You know, the likelihood is maybe you get a bar that looks like this, with a tail on it, and then you get a bar that looks like this, and then another bar that looks like this, and then maybe a big bar that jumps up, and then the same thing coming down, you know, back to the downside like this, and then you get a big bar, another big bar, and so on and so forth until you get down into this area. So in other words, it's not likely just to go straight down. It's likely to have some sort of rally in here and then come back. But this looks like the wave 4 of the previous move. You can see this little consolidation here. That's typical in a wave 4. and this right here is a wave 2. So you had a 1, 2, and this is 3, 4, 5. So you'll probably, okay, so it probably won't go straight down, but you'll probably see it pull back all the way to here first. So it probably won't slow down until it gets here. Then we'll get a bounce, and then we'll come down and retest these lows. So it's probably going to look something like this, where you get into this area, and then a rally up, like so, and then a rally down into this area. So look for that to be the move in the JPY, US dollar JPY. And if we get a little bounce, maybe you get a bounce into this midsection of this candle, this would be a great place to go short. So let's look at that real quick and talk about that in case any of you are interested in looking at the JPY. A lot of times the midpoint of a large candle, so somewhere in this area around 109 or 109, 110, if you could get a small bounce up into this area, be a great short down into this 100 area. So we'll keep an eye on that. Maybe I traded the JPY down into this area, and it was a really good trade. It was like $3,000 or $4,000. So you can make pretty good money on these currencies. You got to give them a little wiggle room because they do chop around a lot. But yeah, I think I got in right here, and I sold right below here somewhere. So pretty good trade on the US dollar JPY. In fact, I wonder if there's a way. To look at that. Yeah, here, Forex summary. You can see the Euro US dollar is not going as well for me. But I don't see, oh, here we go, FX statement. Let's go back, I don't know, to here and say show statement. Nah, it's not gonna. Wow, that's crazy looking. Okay, here's the, yeah, so US dollar JPY is right here. So yeah, it's pretty good. Pretty good little trade there. Of course, we got a negative. We got a negative trade going on the Euro US dollar. If you look at that one, that one's down about 2,700. So I'm giving something back on the Euro US dollar, and that stems from, not that I'm making excuses, but that stems from the fact that I thought that the Euro US dollar, just as I mentioned in here, was in a triangle and didn't actually enter the trade until, remember what I said, a lot of times a good place to enter is when you get a close below. So I entered somewhere in here, it started to work for me, and then whipped me back to the upside. Now I haven't exited the trade yet because we're not technically outside of the triangle possibility yet. So I'm still waiting to see if it'll do that. If it doesn't, then I'll exit the trade and take a loss, and that's just the way trading is. So let's see. Let's look at crude oil. Let's go back over here and look at crude oil. Crude oil's had a pretty big rally here, and of course, we've got this spot on here that we've been looking at. I haven't traded crude oil because it's very difficult to, when you've had the kind of sell-off we've had in crude oil, to really step in at these levels, and I know there's people that do that, but it's just very difficult to do, even though that I knew, or I felt like I knew, that we were going to have a bounce into this area. Still very difficult to do, but it does look like we're making our way up into this area now. I've got the line on there because we've got this pivot here, and if we get a trend continuation, sometimes it won't go all the way past the pivot. Sometimes it'll stop short. That's why I have this line here. And then I've also got the pivot here, just in case it does go past the pivot. This is the zone that we're looking at. So in other words, what I'm saying is this right here is the pivot from the previous swing, which gives us our target. But sometimes if the trend is not finished, okay, if the trend is still going down, sometimes you'll get a run up to just shy of the pivot, like in a zone around this line, and then you'll get a trend continuation where the trend will continue. Most of the time, and the reason this is most of the time, is the market doesn't trend most of the time. Most of the time, it chops around and trades sideways in large ranges. So most of the time what you get is you get some sort of return to just past the pivot right here, and then you get a pullback, and you could get a trend continuation at this point, but more times than not you get a pullback to a higher low, and then the market continues higher to the next pivot, which is right here. So the next stop we would expect to be, after all this, would be up in this area. So I've talked about this before, but that's why I drew that line, in case some of you are wondering, why is there a box and a line? Well, that's why. Because sometimes if the market wants to continue in the trend, and there's no reason why this wouldn't, given the fact that oil is very, very weak, it could stop short of the pivot and then roll over and continue the trend. So we'll just have to wait and see what happens. But certainly you wouldn't want to be buying oil here, because the chances are it might only go to this red line before it rolls over. Or it could go a little further into this yellow box, but in either case, those aren't much further. That's only about $4 further than where it is right now. So not a good entry location. There'll be better ones, along the way somewhere. What else could we look at? We could look at silver. Silver's had a huge run here recently, relative to where it's been. We had this long protracted pull